good afternoon. It is day 51 of the 36-month Forex trading challenge, and yeah, the fact that I'm doing my first broadcast at 4:30 this afternoon kind of speaks of what I'm kind of feeling today, which is a bit unmotivated. I woke up this morning and I just didn't feel like getting up, didn't really feel like doing the morning market analysis, kind of felt pretty bored with the whole challenge, and I'm not quite sure why. Maybe 50 days in, you get bored of anything, but I guess, I don't know. I've talked about this in today's blog post, which you can read at stgforex.tv. Good trading should actually be boring, and if you trade for entertainment, then you know, really you're probably on a one-way street to losing. But yeah, good trading should be boring. It should be repetitive. It should rest in discipline, consistency, and as I said in one of my very earlier blog posts, trading is a daily grind. And I was in London back end of last week, quite exciting, did some exciting stuff down there. I think just coming back to the normality back home, the home office, and doing the morning market analysis stuff, I think it was a bit of a shock to the system today. Call it Monday morning blues, who knows, but that's where we are. Having said all of that, looking over to my right here, I have 3 positions now that are fully protected, that it seemed to be progressing well. I've added a new position, a long position in Euro Swiss franc, which is 50% of the way towards target 1, and target 1, the initial target where I take off 50% of the position. And I have also added a second position to my New Zealand dollar, can't speak today, New Zealand dollar Japanese yen long. So there's quite a bit happening, and the trades seem to be playing out quite well so far. So although I'm feeling a bit despondent, maybe a bit bored with the whole thing, maybe that's a good thing, who knows. And I'll jump into the charts now and just show you these trades and what's happening, and hopefully I'm going to feel a little bit more motivated, a little bit more energetic tomorrow. I mean, if the trades are profitable, the trades are going in my favor, you know, what's not to be excited about. So yeah, let's jump into the charts and take a look. So first up, my short in US dollar CAD, I entered here. This was a close below the 200 simple moving average on the 240 chart. This was a trend entry, and yeah, some initial resistance, but now tracking down very nicely towards my initial target, which is a 1-to-1 reward to risk ratio. This candle could very well close at 6 p.m. on a Z candle, which means the pressure's down. So you know, this is a risk-free trade. My stop is at entry now. I moved that on what I call evolving reward to risk. At the halfway point of this trade, when price got to this level, effectively, you know, the reward to risk ratio inverts, because I'm technically risking this amount from here to here to gain an initial increment of here. So I've kind of brought that into line. You know, I've got to move this distance now, and I'm potentially risking this distance. This was something taught to me at a seminar I went to in London by quite a well-known Forex trader, Jimmy Young, back in the day. This is, goodness me, 5, 6, 7 years ago now. And the one thing I really picked up from that seminar, that weekend seminar, was the fact that reward to risk, or risk to reward, however you describe it, isn't static. It changes over time as price moves in your favor or away from your favor. This is my long trade in Euro Swiss franc. The initial entry signal was here on the cross of the 10 exponential moving average above the 50. I missed this. There wasn't enough room to go anyway to the 200 simple moving average, so I entered here on the close above the 200 simple moving average. This was on the 10 a.m. The 2 o'clock close was in my favor, and it looks like we're tracking now up to the targets. Now the 1-to-1 reward risk level is here, just under the even handle of 1.1000, but I've got a slightly well, not as good reward to risk target here, principally because of the downward sloping 50 simple moving average on the daily chart. And remember, this is what I call a trend trade. For me, a trend trade is a counter trend trade, if that makes sense, because I'm going against the prevailing trend. I'm trying to catch a new trend as it begins. If we close above this level, which it looks like we may do on the day, and we test and close above the 50 simple moving average, although I don't class this pair as being in bullish state until we get above here, which is the previous high prior to the most recent low, then I think this pair's got a long way to run, is what I'm trying to say. But I don't want to be too aggressive on that and try and shoot for a target here when it's very likely we'll meet some resistance to that 50 simple moving average. So as soon as we hit that, if we do hit that, I'll move my stop to entry. I've made profit on this trade, whatever happens, and we may actually continue upwards in any event. My Euro Australian dollar short hit target. I moved the target in slightly. We were meeting some resistance here. I moved it in slightly to take off my 50% profit at this level, slightly inside where I'd set it, and I did that. I wasn't confident we would necessarily get there. If we look at the daily chart, you can see that this is another trend trade, so it goes counter to what I see as the prevailing trend, which is upwards. This is the bottom of the daily channel, so there's a good chance that we'd see some resistance here, or some support here, I should say, which we have. On this trade now, I have made made some profit here. We're now tracking back up towards here. It doesn't matter if I get taken out here, I've still got profit here, so this is a profitable trade, whatever. So pretty pleased with that. And this is Euro Australian dollar, so I'm short the euro. I'm of course long the euro on Euro Swiss franc, so this may cost me here and I may get stopped out, but on my other trade, if we see the euro strengthening, then that trade is obviously going to benefit. Australian dollar, Japanese yen, this has been a pretty good trade for me. This just continues to rise and rise and rise for the moment anyway, but we are approaching the top of the daily trend, which is coming down. Again, this is a trend trade because it goes counter to the prevailing trend, if we get a close, let me show you this, if we get a close today above the 50 simple moving average on the daily, that will be a good indication for further upside momentum. And I am holding this position now. I've taken off I took off half of the position here. I've rolled my stop up to here, so this is, as we stand at the moment, about a 1-to-1 reward to risk ratio if this position reverses on me and gets stopped out. But what I'm looking to do now is to hold this position as long as possible. If we get above the daily trend line, I'm going to add to it, and we'll see how far this can carry. When you go out to the bigger time frames, the weekly, even the monthly, you can see just how far this pair could move. This is the 10, 5 and 3-year low on the monthly chart. We have bids off the bottom here, and there's a possibility we could see this pair rise up to the 3-year high or even beyond. So if I can hold on, this could turn out to be a very, very profitable trade indeed. Of course, the reverse could be true. I could get stopped out, but I'm holding this trade for as long as I possibly can. And then finally, New Zealand dollar, Japanese yen, which you would expect to kind of mirror the Australian dollar, Japanese yen long, which it does. Similar story. This was off the 5 and 3-year low. We saw bids arrive. I am holding this trade here. I've already hit an initial target. I took this target early on the Friday close. I wanted to take some profit before the weekend. Its trade wouldn't have actually hit my target as yet, but never mind. Took 50% of the trade off. I've rolled a stop upwards underneath this consolidation area, and what I did do on the 2 o'clock close is I added to this position. The reason I added to this position is because we closed above the 200 simple moving average on the 240 chart, which to me is a good indication that potentially this has got more upside momentum. If I'd have missed this entry here, then this would have been my opportunity to get in. My rules state that I can get in on a close above the 200 simple moving average, providing we are inside or on the right side of the center of the daily trend line. If I go out
here to the daily. You can see that clearly inside the daily center trend line. So potentially we've got all this move up to the top of the trend line if the trend is still in place. So I took that opportunity to add to this position, seeing a little bit of resistance or a little bit of pushback down temporarily below the 200 simple moving average, but you know, the bids seem to be in place, and you know, there's a good probability we're going to get back up here, or move back up here, or move up here even. So this, now I've added a second position, probably the most dangerous time in any trade when I add a second position, because I've taken this from a profitable protected position now to having you know, just under 2% risk on it. But you know, risk is part of the game. I'm going to hold this, see where we go, and see if we can get back up into these highs.
So it's Tuesday morning, day 52, and I'm up bright and early. 6 o'clock close has just happened. Got the coffee, got my water, about to do the market analysis, and yeah, talking a bit quietly because the family's still asleep. This is a great time of day. I always enjoy this time of day, usually, once I'm up, and I'm feeling a lot better today. Felt very demotivated yesterday for some reason. But yeah, feeling good today. Maybe it's because the trades are working a lot better. I've made money overnight while I was asleep, which is always good. But I'm going to jump into the charts now, do my analysis, and we'll see how the day pans out. So it's, in fact, I forgot something. I need to get a drink. It's about 3:30. On Tuesday. Had a busy morning, put on 2 new trades, short in Australian dollar, New Zealand dollar, and a short in Australian dollar, Canadian dollar. The first trade, Australian dollar, New Zealand dollar. Yeah, trend trade. I think I may have made a slight mistake on this in terms of shorting, even though the 50 simple moving average was not flat or sloping down. So I need to have a look at this. I'm going to review this at 6 o'clock. If the trade is not in profit, I'm going to cut it and get out. The Australian dollar CAD trade was a short off the top of the range. Consolidate a little bit while I've been out. Been to my jiu-jitsu class, did a private lesson, did the class, did some rolling at the end, some sparring. So yeah, then I had a haircut. So, yeah, been a busy time, but that trade seems to be playing out quite well now. So a couple of additional trades. I've been really tight on my stops this week, and I'm trying to lock in profit. It's a constant battle with trading. I think you give a trade too much room, you lose your profit if things reverse, your paper profit if things reverse. You don't give a trade enough room, and you're stopped out, and then the trade moves massively in your favor. So this week I'm just sort of tightening up the stops a little bit. I can always get back in if I get taken out, but you know, you live and learn in this game. One of the things that I have done and will be blogging about today, a little bit late on the blog today, day 52 blog, if you want to check it out, stgforex.tv. I'm talking about how I determine whether a market is in a range mode, bullish mode or bearish mode, because I have these 3 modes that I look at. One of the big changes I made to my trading a number of years ago, which helped me become more profitable, was establishing the market mode before deciding on what I was going to do. Because if you play a range strategy or a consolidating strategy in a trending market, you're going to get stopped out. Similarly, if you try and play a trending strategy in a range market, well, you're probably going to get whipsawed. So you got to know what kind of market you're in, and I work hard to establish what kind of market I'm in, so I know which of my 4 strategies to apply. And I have 2 range strategies, and I have 2 trend strategies. That means I can play any market, providing I can establish what kind of market we're in. So yeah, I've been kind of a little bit unclear about how I determine what's bullish, what's bearish, what's range. And I wanted to tighten up on those rules, and wanted to tighten up so that I have consistency in looking at a chart and saying, yeah, it's bullish, bearish, or range. So I've done that. I do talk about that in today's blog post, so please check that out. But basically, I'm looking at really 2 things. I'm looking at the structure of the market, you know, in in a bullish market, are we making the market's been coming down, it's been bearish, we're now changing to bullish mode. So was there a lower low? Well, okay, if there was a lower low, maybe then, we're not necessarily in bullish mode as yet. If the market failed to make a lower low and subsequently has made a higher high over the previous high, that's a good tell for me that we are probably entering a bullish mode, moving from bearish to bullish. And then the other thing that I look at to confirm that, if you like, is a close above the 50 simple moving average. So hard to explain hard to explain talking to the camera, but I will talk about that in the blog post today, day 52. But got some tighter rules now on establishing that, which is going to help me be clearer and more consistent in my future morning market analysis, in my analysis of the market, to help me trade the right trades and the right strategies to find the high probable trades and to make the money. So that, my friends, is what you call overpacking. I ordered a new bag for my laptop when I'm traveling the other day online, and it's come today. I had no idea what it was. The box was so big. Paid for this out of a winning trade that I closed out, so a bit of a reward. Yeah, unbelievable. Look at this. Unbelievable amount of packing. I've got to find somewhere to put all of that now, but hey, that's the consumer society we live in these days, unfortunately. But yeah, nice little gift, place to store my laptop safely, but far too much packing. So just dropped the kids at school and I've come up to the new house, which we're going to be demolishing. Well, this isn't the new house. This house is going to be demolished, the new house being built. Means I'm going to be pretty busy this week. Distraction from trading, planning and doing various stuff in terms of briefing the builder, etc, etc. But pretty exciting project and a beautiful location. Planning to put an office in there to focus away from the house on the trading, so we're all pretty exciting. But yeah, quick update on the some of the trading positions. My Australian Japanese yen has benefited from some news overnight, so I've added to that. Australian dollar CAD short is a little bit under pressure. Sorry, I thought someone was coming there. A little bit under pressure. Having traced down and then bounced back up, so those trades are going to play out how they play out. The important thing is that I manage my risk at all times. I put yesterday's blog post on eToro. You can read this at stgforex.tv. Got some stupid comments, actually, some comments from people that probably got nothing better to do than to criticise what I put up there. In fact, I put the post up there. One of the charts is quite complicated because I'm trying to illustrate a point, and I put the post up there, and literally within about 2 seconds somebody had responded, what's this all about, Obviously I haven't read the blog post. It's what you get, unfortunately, but I ignore all of that and focus on what I'm focusing on. Interesting, when you look at these people that comment, quite often they're the traders that actually could do with reading this advice, because they're the unprofitable ones with not a great track record on eToro, so take it with a pinch of salt. But anyway, with that said, I'm going to jump back in the car, head back home, and check in for the 10 o'clock close.
So it's about 10 to 8 on Wednesday evening. Just thought I'd do a quick update on the trades I'm now out of and the trades that I'm currently in. First up, US dollar CAD. This was entered here on a trend trade. We tracked down. I trailed my stop. I trailed my stop principally because we were Yeah, why did I trail my stop? That's a very good question. I brought my stop in aggressively. Let me just double check. It must be something to do with the weekly. Let's have a look. Yes, because we were coming down towards the weekly 200 simple moving average. A little bit difficult to see there. And trail the stop aggressively as a result of that. And going back to the back to the daily and back to the 240, was stopped out here, and then price tracked down towards my target, and then I would have been stopped out anyway. So that trade is now done. Made some small profit on that, but nothing to write home about. Next, into the synthetics on Euro Swiss franc. Similar kind of story. Trail my stop, having hit targets. Roll this in aggressively, and was stopped out. Never managed to push up beyond this level. I was getting a little bit confused between that last trade and this trade. I tightened the trailing stop here because of the 50 daily simple moving average rolling down here, and I expected some resistance here, which is what we got, which stopped me out. I'd hit a target here. I took off the target slightly earlier than I normally would. This was inside a 1-to-1 reward risk ratio because of that 50 simple moving average. And rolling in the stop, I made some decent money on that. Nothing again to write home about, but worth taking that trade to make a small amount of money on that with relatively low risk. I felt, with price closing above the 200 simple moving average on the 240 chart. And then onto my commodity synthetics, those pairs that trade with the New Zealand dollar, Australian dollar, or Canadian dollar, which are linked to world commodities. I am in a short on Euro, Australian dollar. I have hit target. We're now look to be trading below the daily trend line. Had a push down today, bit of retracement, and now seem to be pushing down again. If I go out to the bigger picture on the daily chart, you can see we're at the bottom of this daily trend line. Close below here would signify bearish mode, having crossed underneath the 50 simple moving average and the recent structure low, and there's every possibility we could get there. So just holding onto that. I will probably look to close below this level before considering adding, but we'll see how this trade plays out. Australian dollar, Japanese yen. Overnight, last night, there seemed to be offers in yen. People were getting out of the yen. This was this candle here. On this candle here, I added to my position, already profitable position. I added at the top of this trend line. This is the green line that shows where I added. So a little bit of pressure on that trade now. Whatever happens, this trade is a profitable trade because my stop is tight. So just going to hold this for as long as possible and see again where I get to. Australian dollar CAD causing me a bit of problem. This is a range top sell, sold here. We tracked down, got probably 50% of the way to target. We then had this candle overnight, Australian dollar strength. We then had this push up here. I think this was possibly something to do with the oil price, which the Canadian dollar is linked to, but doesn't really matter. So we're kind of holding at this level here at the top of the range. I've not done anything. I've not lightened up on this position yet. I was debating whether to do that, having got halfway towards my stop. But for the moment, this seems to be holding. I'm going to hold the full position and see if we can't get a track down into this level and to my target. On the daily chart, you'll see the the price action has been down, and I have some support, or I should say resistance here, from the daily 50 simple moving average, which is tracking down. If this candle closes above the daily 50 simple moving average, then that could be my signal to lighten up on half of my position. But this level has held. It held here, it held here, it held here. If today is the day we close above, that could be telling me something's changing, and it could actually be a reason to exit all of my position. But I won't know that until the 10 o'clock close tonight. Australian dollar, New Zealand dollar, again caused me some problems, this trade. I made a bit of a mistake here. I sold on this candle. This candle had a long wick here. Not the best candle to be selling on. And the 50 simple moving average was still marginally sloping up. Now, my rules clearly state that that should be sloping down or flat. As a result, I have taken off a third of my position here, another third of my position here. We're now tracking up towards my stop, and there's a possibility we could get there. This trade, I was restricted on margins, so only risked 1% of capital on this trade, so I'm less concerned about this. This resistance level here is holding for the moment, so if I'm tagged out, I'm tagged out. I have more profitable trades in play that will more than pay for that. And then finally, New Zealand dollar, Japanese yen, a very, very similar trade to Australian dollar, Japanese yen. I've not added to this position as yet, but I have rolled a tight trailing stop, which is below the 200 simple moving average. There is less room with New Zealand dollar, Japanese yen to get anywhere further. We've got this 50 simple moving average pointing down on this daily chart, so I took the decision to add to what am I trying to say, my Australian dollar, Japanese yen in favour of this pair, but you know, overnight these pairs sometimes move. There can be news out overnight, so I'm just going to hold them and see what tomorrow brings.
Well, good morning. It is Thursday morning around about 20 past 8, and I'm still in the dressing gown and pyjamas. I was up at 5:45 this morning. It's probably why I look a little bit tired. And done the morning market analysis. News overnight is that my Australian dollar CAD short, yes, was stopped out. I probably should have seen this coming. There was quite a strong bid candle yesterday that turned up, that pushed back into the top of the range, and last night at 10 o'clock the daily candle closed above the 50 simple moving average on the daily chart. Now, I didn't exit there. I probably should have done. The spreads get very wide after 10 o'clock on the currency pairs I trade usually in my broker account, so it can be difficult to do anything at 10 o'clock, but I got up this morning, had been stopped out. It's manageable risk. It's 2% of capital, so you know, that's fine. It's not ideal, but it's fine, and just got to get on with the job. So on the plus side, Australian dollar and New Zealand dollar pairs, my longs in Australian dollar, Japanese yen, New Zealand dollar, Japanese yen, I should say, are doing well and have gone more bid overnight, so got a decent profit in both of those. And a signal showed up this morning at 6 a.m. on New Zealand dollar, US dollar. I got long on a trend signal. Basically, price had started to look like it was reversing. Saw a close past the 200 simple moving average on the 4-hour chart, and took a long entry. So we'll see how that plays out, but it kind of plays into the story of strength in New Zealand dollar, at least for the moment. But as we know, anything can happen in the currency markets. Got a really busy day. Got a meeting with the builder on the house. That's going to be quite an in-depth meeting, so that's taking up most of late morning and early afternoon. Then I've got to go into the city. I've got a meeting with a company who might be looking to bring me in to do some recruitment stuff for them on probably a contract basis. So you know, helps pay the bills. Yeah, means I'm probably not going to be checking into my charts at all until about 6 p.m. But you know, that's the way of the world. That's why you have a stop loss. And yeah, going to be a busy day. But I'll check in later and see what has transpired. Well, good morning. It is Friday the 13th. There's the video recorder in the car. It's Friday the 13th, and unlucky for some. And yeah, over the last 24 hours, I've been pretty busy actually, and doing some stuff with the house. I'm in town today in the city for a meeting and then a networking lunch. So just feeling a little bit stressed. You know, some of the trades have gone against me, and talking about unlucky for some. Yesterday, if you were trading the euro, it was probably an unlucky day for you, because yesterday on the euro, basically the ECB came out and said that they were going to cut rates into negative territory. They were going to extend the bond buying program, so quantitative easing, and basically the market reaction to that was offers on euros. So euro pairs across the board, including the major euro US dollar, went to the the sell. People were selling euros, and then pretty much on the next candle, I look at the 4-hour chart predominantly, pretty much on the next candle the bids came in and took all the gains that the short players, the short-term short players had capitalized on, or maybe not capitalized on, within a few hours. So it just is another illustration of why I never trade the news. I protect myself from the news. I had a short on in euro Australian dollar. Basically I was whipsawed, so I was taken out on a trading stop. Price then dropped, so I would have made, I would have been in more profit on that trade. And then the very next candle, price basically whipsawed and came back up would have stopped me out anyway. So yeah, very, very difficult market to trade. Big news like that is always dangerous because you can get whipsaw action. Who knows what the motivations are? I mean, technically, if an interest rate is cut, a currency would tend to weaken. If there's more QE, a currency would tend to weaken. But go figure. Maybe it was a trap. Maybe that was priced in. Maybe the big boys were waiting for the short sellers, the day traders, the retail traders to come in and then punish them by buying into their sells. But who knows? Who knows? Anyway, got this meeting now. Got this networking event today. Going to get back home. I'm going to do a roundup of all that's happened this week. Overnight, I was stopped out of my Australian New Zealand dollar short. I entered a euro Japanese yen long on a signal. Now, psychologically, that was quite difficult to do because psychologically, the expectation is maybe that euro is going to weaken because of what happened yesterday. But as I've just explained, the ultimate reaction, the real move, possibly was to bid. So entered a long position. I'll check in on that later. And my Australian dollar Japanese yen, my New Zealand dollar Japanese yen longs are still in play, kind of stagnated a little bit over the last 24 hours. They're both in profit. I'm just holding on to those. I've got relatively tight stops as the moves up haven't been as rapid as I would have hoped. So yeah, just going to enjoy the meeting, enjoy the lunch, get back home. I'll do a roundup of everything that's happened. So that's it, networking lunch done, errands run, and off home. Kept an eye on the trades this afternoon. New Zealand dollar seems to be under some pressure. Australian dollar, Japanese yen seems to be pushing back to bids, which is good news. But I won't really know till I get home. Been away from the charts for a bit too much today, but that's sometimes the case. So I'll get in the car, get home, and see what's what. So back at the ranch, changed out the suit, and back in front of the screens. Let's get the light a little bit better. Hey, I wasn't planning on talking about this, but come back today. Starting to get some subscribers on YouTube, which is really good, and also starting to get some hate comments. What I would call hate comments. Well, not hate comments. They're not too bad, but kind of comments saying, one in particular today, you're wasting your time. What are you doing? Give up, all of this kind of stuff. And I just wanted to talk about that because there's two ways to react to stuff like that. And the first way is to stop what you're doing, think you're wasting your time. And the other one is to get more motivated. And for me, it's always been the latter. And no matter what you do in life, I started a business in a recession back in 2008. People told me I was wasting my time and this, that, and the other. And I made a real success of it. But sometimes things take time, and there's an incubation period where you're learning, you're developing, and you're advancing. And although the challenge hasn't got off to the flying start. I mean, the targets that I've set are very, very high indeed. But I am learning as I go. I'm enjoying the experience, and that's really what it's all about. So I say let the haters hate. I've certainly had one comment on YouTube. There's a comment on the blog post the other day as well. And then there's some really good comments. But you got to choose what you let into your brain. Choose what you let influence you. And any negative comments, it's fair enough. People can leave what comments they wish, but it's how you choose to react to stuff that really counts, and it's how you choose to respond that determines what you do next. And it's exactly the same in trading. To draw an interesting parallel, if you lose a trade, the natural reaction is to get upset, to not maybe take the next trade, which could have been a winner, and to react badly. So you become quite immune from the emotions of things when you put yourself into the trading world. And I think part of my background in recruitment, business development calls, people not taking your calls, people slamming the phone down on you, did that for 10 years pretty much. It makes you quite thick-skinned, and I focus all the time on what I can do, what I can do to advance, and don't worry too much about what people say or what people don't say or any discouragement or whatever else. So I just kind of was gonna get that off my chest on a Friday afternoon. It is Friday the 13th after all, so always good to get a bit of a negative comment on Friday the 13th. And if you're watching this and want to leave me a comment, then please feel free to do so. But please also subscribe. Hit the subscribe button, hit the like button, and you'll be sure to receive these future videos moving forward. Now, looking at the charts behind me, I'm going to jump in there now, do a quick overview of the last couple of days since I last went into the charts on screen. To wrap up the week, I'll then get this video off to my editor and get this published. So yeah, let's jump into the charts, and I'll show you what's happening.
First up then, a quick review of my weekly trade management sheets. This shows my weekly relative strength performed last weekend. Daily relative strength performed every morning, where I look to identify the strongest performing pairs, strongest performing individual currencies. Whatever the relative strength analysis that I do tells me, I put this up here. This is my risk for September, what I risk on each individual trade, and then down here these are the individual trades. If they're red, they're closed out. The risk exposure is 0 when they're closed out. This is profit or loss here. Anything green is open trades. So here I've got risk on this particular trade, which I opened today, but no profit or loss as yet. Not taking any of the position off and not hit target. So overall for the week, this is the position of booked profit. Overall risk is this here, so that's the risk, that's the book profit. So my risk exposure is here, and my maximum risk exposure is here. So I've probably got a couple more trades that I could have taken this week within my risk boundaries. Let's jump into the charts now. Let's look at let's use this. Let's look at the trades that I have been in and that I am currently in. So US dollar CAD here. So this particular trade, yeah, I think I talked about this earlier on in the week. That's why the information is not on the screen still, so I'll pass on that one. That was a short trade. As we'll see here, we're now into kind of bullish territory. In fact, if this closes here above the 200 simple moving average on the 240 chart, this then is potentially a trend buy signal. We've changed direction. We've closed above the 200 simple moving average on the daily. Yeah, that possibly gives enough room to go to this level here. So that could be a good signal for me. So I'm glad I've had a quick pick up on that one. Whether I'll take this at 6 o'clock on a Friday though is another matter. Possibly not. I'll have a look at when we get there in about 25 minutes. New Zealand dollar, US dollar. Okay, so this is a long position. This is a trend trade, and yes, basically this position's been under pressure since I got in. We closed above the 200 simple moving average. We've then tracked down. We've closed below the 50 simple moving average. On this candle here, I should have taken a third of the position off. I was out and about. That was the 2 o'clock close. Here, this close back of the 10 exponential moving average over the 30 is a signal for me to take off a third of the position, which I'll be doing at 6 o'clock. And then we'll see how this trade tracks. It may stop me out or it may reverse, who knows, but at least I'll have reduced my maximum overall risk exposure. Next on my synthetic pairs, Euro Japanese yen, took a long position here this morning. This was off the close of this candle, above the 200 simple moving average, and above the trend line. That's my second attempt to get into a trend trade on this strategy. We've then tracked sideways. We've kind of pressed down into my entry, but have closed. Looks like we're going to close above. Looking for some bullish momentum up to the top here on the daily. What you can see is, yeah, there's a reasonable, reasonable chance that we could get there. We have closed above the 50 simple moving average on the daily. So, time will tell whether we can get back up to this level and beyond. On my commodity synthetics then, those that trade with the Australian dollar, New Zealand dollar or Canadian dollar, which are all linked to commodities. I had a trade on here in Euro Australian dollar. This was short. This booked a profit of this amount here. This trade is an example. It's a euro pair. It's an example of what happened on the ECB announcement yesterday. So what happened is ECB said they were going to cut rates here on this candle. Price spike, took me out, then closed down. So the currency weakened, as you probably would expect it to do. On the very next candle, price spiked back up and took everybody out who was short of this news. Anyone trading the news may have been caught by surprise here. So glad to be out of this trade. I got out with a very tight trailing stop. Just wait for another signal to show up now on that. So great reason, great example of why I don't trade the news. Australian dollar, Japanese yen. So this trade continues to do pretty well. I entered here, added a second position here. We now seem to be tracking up a little bit further. It's a little bit slow progress, but if I go to the daily charts, looks to be plenty of room for me to climb a lot further. This is quite a bullish ascent. Time will tell whether we're going to get any further on that, but for the moment this is a profitable trade. What else do we have? Australian dollar CAD. I may have talked about that already. Let's have a look. No, I haven't. Australian dollar CAD. Yeah, a bit of a frustrating trade. This was a range trade. So on the daily chart here, this is the range, the black lines. I've taken off the yellow box as we've broken above the range. I sold here, hoping. I don't like the using the word hoping, but probability stated that we may push back down into the lows here. We didn't. We closed above, and yeah, I was out of this trade on my initial stop. This candle here was telling. This closed above the 50 simple moving average on the daily chart. I should have already got out there. That was a 10 p.m. close. Always difficult to get out positions after 10 o'clock because the spreads on the broker account widen. So I stayed in a little bit longer than I should have done and was stopped out on my initial stop. Yeah, one of those things. You're going to have losing trades, but it's what you lose when you lose versus what you win when you win all the time. Australian New Zealand dollar. Similar kind of story. I was short here on a down cross. So this is was a trend trade. The 10 exponential moving average crossing below the 50 simple moving average. Now I made a mistake on this trade because I took the trade even though the 50 simple moving average was still sloping upwards. That was a mistake. I stayed in the trade but began to lighten up very quickly. So took off a couple of positions early, and then my initial stop took me out for my last position. In fact, that on there needs changing because I was taken out, I hit target and then I was taken out on a trailing stop. So that's target, trailing stop. So I record, how the thing happened. What was the catalyst to get out? As you'll see here, Australian dollar, New Zealand dollar. That was a closed stop. Closed stops. That's me manually exiting the market, and then initial stop here. So I can see, here. I reduced my overall loss considerably by these initial close stops. My risk was slightly less on this trade due to margin limits, but even still, walked away with less wounds than I could have done, which is why I stagger out of losing positions. New Zealand dollar, Japanese yen. New Zealand dollar's been under a bit of pressure. Australian dollar's done quite well, or continues to do quite well. New Zealand dollar, you can't really see this very well, but on the daily chart we kind of tested the 50 simple moving average. There's been some rejection off that today, and if I look at my 240 charts, you can see that I entered here, second position here, second position still in profit. I've got a trailing stop here. We've got the 50 crossing over the 200 on the 240 chart. That's potentially a bullish signal, but you know, only time will tell. I think this pair has got potentially, if we can close beyond the 50 simple moving average on the daily, I'll look to add a third position. I may get stopped out, but if we do close above this, I think there's a reasonable chance we could then go all the way back up to this level. But I don't know. Nobody knows. Trading's a game of probability, about risk management. That's the main thing. The rules that you have, you've got to stick to them, so you know you're doing things consistently. But at the end of the day, they're a little bit of a comfort blanket that kind of gives you protection from overtrading. And you know, at the end of the day, you never know. Trading's pretty simple. If you boil it down, you know, lose less when you lose and win more when you win.